Welcome to this afternoon's hearing of the inquiry into the New South Wales Government's management of the COVID-19 pandemic. As with this morning's hearing in relation to education, this afternoon's session in relation to Treasury will be streamed live. It's a virtual WebEx video conference meeting. And to get the meeting started, I welcome the three witnesses we have from New South Wales Treasury. Mr. Michael Pratt, AM, the Secretary of New South Wales Treasury, Ms. Joan Wilkie, the Deputy Secretary, Economic Strategy and Productivity of New South Wales Treasury, and Mr. Stephen Walters, the Chief Economist of New South Wales Treasury. Mr. Pratt, if you could commence the process, and if each of you could give your name, your position, title, and then take either an oath or an affirmation. Mr. Pratt.
Thank you. Michael Pratt, Secretary of New South Wales Treasury. I solemnly, sincerely and truly declare and affirm that the evidence now about to be given by me shall be the truth, the whole truth, and nothing but the truth.
Thank you, Mr. Pratt. Ms. Wilkie.
Joan Wilkie, Deputy Secretary, Economic Strategy and Productivity in New South Wales Treasury. I solemnly, sincerely and truly declare and affirm that the evidence now about to be given by me shall be the truth, the whole truth, and nothing but the truth.
Mr. Walters.
Stephen Walters, Chief Economist, New South Wales Treasury. I solemnly, sincerely and truly declare and affirm that the evidence now about to be given by me shall be the truth, the whole truth, and nothing but the truth.
Thanks to all three of you for your attendance here this afternoon. Mr. Pratt, did you want to give a brief opening statement?
Chair, yes, I will, if that's okay by you and the committee. Thank you.
Yes, the floor is open to you.
Thank you. The unexpected onset of the coronavirus and the resulting suppression of activity has had a profound impact on the New South Wales economy, as has been the case elsewhere. The economy almost certainly will contract in line with the national trend, and unemployment will rise significantly. That said, the state is in the fortunate position of not having suffered as many infections nor deaths as in other places, particularly in the US and Europe, thanks to the early actions of state and Commonwealth governments. As such, we are now in a position to be able to release some of the earlier restrictions, including for schools and limited movements by citizens. This will help to mitigate the impact on the economy. Still, there will be significant impact on the New South Wales economy. Firstly, it is likely that national and state economies have entered a period of recession, the first for nearly 3 decades. New South Wales Treasury's own modelling of the impact of GSP growth continues to evolve. Modelling released by both Commonwealth Treasury and the Reserve Bank, which has been released publicly, suggests a fall in national output of around 10% over the first half of 2020. The service sector of the state's economy has been hardest hit, particularly hospitality, accommodation, retailing, travel, the arts and recreation sectors. Activity in the worst affected sectors has fallen substantially, although other sectors of the economy like healthcare, mining, farming and manufacturing have been much less affected. There has been a substantial impact on the labour market, with widespread job losses reported. Yesterday's official jobs report for April showed a rise in national unemployment to 6.2% from 5.2%, but a collapse in hours worked, -9%, means underemployment soared. Preliminary estimates by the RBA and Commonwealth Treasury suggested a jobless rate of 10% is likely by mid-year. The Commonwealth Government JobKeeper package will help to mitigate the impact on the labour market, but it cannot prevent a rise in unemployment. The impact is showing up in the official data, but this will become even more apparent in coming weeks as more data is released. Survey data has shown there is to be significant impact with business confidence, for example, falling sharply to all-time lows, although it rebounded this week. Retail spending actually has increased, albeit mainly because of hoarding of toilet paper and dry foods. There have been substantial falls in global equity markets and interest rates, although equity markets also have rebounded. The Australian dollar has fallen sharply, although it has strengthened more recently. Oil prices went negative last month for the first time, but have since recovered. There have been several fiscal support packages put in place to mitigate the impact on the economy, including by the New South Wales Government. Key aims of the packages have been to cushion the impact on business cash flows and maintain links between employers and their employees. The total fiscal support delivered so far adds to more than 10% of national GDP. The RBA also has responded, taking the cash rate down to all-time lows, providing cheap wholesale funding for commercial banks and embarking on an unprecedented program of quantitative easing. The RBA's purchase of government bonds, including those of the New South Wales Government, has eased liquidity concerns and lowered the cost of funding. It is inevitable that the state of public finances will deteriorate. Private sector economists forecast Commonwealth budget deficits of as much as $140 billion in coming years and a blowout in public debt. The Commonwealth's AAA credit rating already has been placed on a negative outlook. The impact of the virus could change the longer-term nature of the New South Wales economy. For example, our relationship with China may change, particularly in regard to trade, tourism and education. There may, however, be productivity-enhancing reforms that are accelerated, including via the use of technology and the more effective management of the Federation. Thank you, Chair.
Thanks for that, Mr. Pratt. I'll now go to the opposition to take the first round of questioning. Is it you, Mr. Graham? Or, oh no, Mr. Secord.
Thank you, Mr. Shoebridge. Thank you, Treasury officials. Thank you for attending today's proceeding. Yesterday was a startling day for the nation, and we were told to prepare for more economic pain with the prospect of more than 650,000 people out of work by the end of the year. And yesterday we were told that 594,000 jobs would be lost nationally, 230,000 of them in New South Wales alone, and that New South Wales unemployment rose from 4.9% to 6%, and we expect to have 420,000 New South Wales residents unemployed by December. And I acknowledge your statement at the beginning where you said that underemployment has soared, and we feel for those who are unemployed and those who are unable to access JobKeeper or JobSeeker. So that is why Labor is taking a bipartisan approach to reform, and that is why we agreed to allow the Berejiklian government to operate and provide supply without an appropriation bill. In extraordinary times, we do and allow and undertake extraordinary things. So we welcome the Treasurer's acknowledgement of our bipartisan approach, and that is why we are disappointed that he's not here today to attend this hearing. We saw the Education Minister, Sarah Mitchell, attend this morning's hearing, and we are also disappointed that the Treasurer has rejected our request for economic briefings, our also request for him to address the New South Wales Parliament, which occurred in Canberra with Josh Frydenberg. So we appreciate
Sorry,
the time.
Mr. Secord.
No, I'm going. I'm giving.
Mr. Secord, no. We have Mr. Khan about to raise a point of order, but I can probably predict it. I was
just going to actually. I can preempt.
I would just suggest we get to a question.
Yeah, I was going to say that. So I was just going to thank Mr. Pratt, Ms. Wilkie, Mr. Walters, and we appreciate the work of the hardworking staff in Treasury. And by the way, Mr. Pratt, how many people are actually employed in Treasury?
In core Treasury, Mr. Secord, I'm referring to core being the economics, fiscal team and support around broader finance support for the sector. That number is around 500. Broader Treasury plus that number is around 1,000. So that takes in T-Corp, iCare, State Super.
T-Corp. Right. Thank you.
We thank them too.
So we thank them too, and I think I'll open up with probably a bit of a Dorothy Dixer, bit of a general question. So what is your view on the state of the New South Wales economy as we sit here today?
Okay, I might at that point I might get our chief economist to give you some comments, Mr. Secord.
Mm-hmm.
So,
Mr. Secord, the economy, as Mr. Pratt said in his opening statement, is suffering at the moment. We're in the midst of finalising some economic at the moment. So, as Mr. Pratt said, the forecast for the Commonwealth Treasury and the Reserve Bank Treasury, the Bank national economy, are going to be pretty close to what is happening in the New South Wales economy at the moment. So, as I said in previous comments earlier this year, it's difficult to get a firm handle on quarterly profiles for state economies. We don't get gross state product on a quarterly basis. So it's hard to say whether quarters will go negative or not. But it's pretty clear that the economy of New South Wales is in a recession. It's our first for nearly 30 years, as we know. And as you indicated yourself, that's why unemployment's going up so sharply. So we had a 1% increase in unemployment for New South Wales yesterday. It's pretty clear that will go higher. We see those numbers in the expedited survey results of the Bureau of Statistics as well. Straight read from those. It does imply unemployment's going to approach 10% in coming months, which is very consistent with what has happened in previous recessions, even though we won't be able to confirm that in the quarterly GSP numbers. The fact that unemployment got to 10% in the 1980s recession, it got to 11% in the early 90s recession, those are probably ballpark numbers as to where unemployment's going in this downturn as well.
Thanks, Mr. Walters, for that. Could I just ask, particularly Mr. Mukia and Mr. Secord, if you're getting an answer from a witness, if you could place your microphone on mute, because there's a very loud paper shuffling noise that comes across. And could I ask each of the committee members, the first time they speak, for the benefit of Hansard, if you could just introduce yourself the first time you speak. I'm sorry, Mr. Secord, back to you.
Do you want me to? Thank you. I'll just another quick. This morning, the Premier said that revenue had dropped by $9 billion. Is that correct?
yes, Mr. Secord. Look, at this point, directionally, that's correct. I mean, I think you would appreciate that as a result of the response packages, there has been revenue both waived and deferred, and also the economic impact on revenue that our chief economist has just mentioned is being modelled as we speak. So things like stamp duty, we've seen, for example, homes closed to auctions, the impact that will have on stamp duty revenue and so on. But broadly, the number that the Premier has mentioned is correct, yes.
My colleague, and just saying thank you for your time and thank you for the work that you've been performing for the state over the last 4 weeks. Can I just unpack some of the detail, Mr. Secretary, that you put in your opening statement, which my colleague has already asked? You say that you're expecting a 10% downturn, and you say that resides from the RBA and Commonwealth Treasury. Just to be clear, the RBA and Commonwealth Treasury made that forecast for effectively Q2 and Q3 this year. So when you say a 10% downturn, is that the timescale in which you're also envisaging?
Mr. Wilkie, if you don't mind, I'll answer that question. So the time frame both the Commonwealth Treasury and the Reserve Bank's looking at is a peak to trough decline in GDP by June. So it's actually in the current, not Q3.
Yeah, okay, that makes sense. And so, but they also said that they expected an increase, a bounce back circa 6% to take place from Q3 onwards, without them necessarily making a full forecast for the rest of the next financial year. Is that what you're presuming too?
Well, Reserve Bank has made more detailed forecasts than that. So they have a 5% drop in GDP in calendar 2020 and a 3% recovery in calendar 2021. My understanding is Commonwealth Treasury has not released that detailed level of forecasts. They've said there's a 10% drop in GDP peak to trough, as I said earlier, and a 10% unemployment rate, but they haven't put out, to my understanding, what the rebound would look like.
So my question is have you prepared any independent forecasts for how you think the economy is going to look at June 2021? So once we take the next financial year, from June of this year to the next year, what do you see as being the likely growth that New South Wales will experience or decline? What rates should we be expecting? And has Treasury prepared that modelling yet?
Yeah, that's fine. Yeah, I'll answer that one as well. Look, we're finalising those forecasts now. So, as I said, the Commonwealth Treasury's numbers are not finalised yet. Those preliminary forecasts were the ones I referred to earlier. Our forecasts are being finalised at the moment. So, look, I think you should expect a rebound in calendar 21. We haven't got a final number on what that rebound would look like, but it is fairly typical during an economic downturn as severe as this one, that if you get a big fall in GDP like we're expecting, or GSP at the state level, you will get quite a good rebound of something maybe less than 10%, which is consistent with what the Reserve Bank has been saying. You get a big fall in GDP one year and a rebound of something smaller in the subsequent year, because there is some permanent impacts from a recession that takes some time to overcome. So you don't necessarily whipsaw back by the same amount.
Mr. Walters, you're not saying that there's necessarily going to be a V-shaped recovery as sharp as the decline. You're saying that it's more likely that there's a sharp downturn followed by a slow rise. Is that a fair characterisation?
That is a fair characterisation. I think the description of a U-shaped recovery is probably more around the way things are evolving. Again, we don't have precision on that just yet, but that would be my understanding, that a V-shaped recovery is probably unlikely here.
Okay. And do you have a number for how many people in New South Wales you expect to be unemployed in June 2021 yet?
We've got a rough figure of, it's about, I think I need to consult my notes, but I think it's about 460,000 people. But that's based on our very preliminary modelling that assumed a 6-month shutdown for the New South Wales economy. Now, we've been able to, Mr. Pratt said in his opening statement, we've opened up parts of the economy earlier than we thought. So the number could be somewhat less than that, but again, we haven't finalised those numbers. The number.
Just to be clear, just so I'm hearing you right, Mr. Walters, by the middle of next year, after the economy effectively has been open still for a year, in this state you are thinking that there'll be 460,000 unemployed, or that's a conservative number that you expect?
No, that's not what I said. I said the modelling we did initially was assuming a 6-month shutdown in the economy from around mid-March that would take us through to mid-September, and that was the 400,000 jobs will be lost in New South Wales. Since then, we've made very good health outcomes. We've therefore been able to loosen the restrictions a bit earlier than we thought. So I suspect the number will be slightly less than that, but we haven't got those final figures yet.
Just slightly less, but you mean what? Do you think 400, 350? What should we be expecting in a year's time?
Mr. Mookie, we don't have those numbers. So it'll be less than we originally forecast when we did that 6-month shutdown scenario.
Okay.
Mr. Pratt, you could probably direct this to the appropriate person. So with the removal of job seeker and job keeper, what will be the impact on the unemployment rate in New South Wales?
I'll get Mr. Wallace to comment on that again.
Mr. Secord, so our understanding is that JobKeeper will be in place until the end of September. That is the original timing that the Commonwealth Government put that program in place for. So we're assuming that's when the program ends. There's been discussion around perhaps later finishes, earlier finishes, expansions, curtailment. There's a lot of uncertainty around that. We do think that JobKeeper has had a material impact on reducing measured unemployment, and the Bureau of Statistics put out some numbers on that yesterday. It's an indication that if we used a different definition, for example, of workers that are stood down, which is the US assumption, for example, if workers are stood down but have a job to return to, they're still considered unemployed. That is not the case in Australia. So if you have a job to return to, even though you're not working at the moment, you are considered to still be employed. If you add those numbers back in to the unemployment rate, it'd be closer to somewhere around 10% or slightly higher.
So you expect that just so I get this clear in my mind, so you expect the unemployment rate in September to be 10%?
No,
more.
that's said. If we didn't have JobKeepers, it'd be closer to 10% or slightly above. We do have JobKeepers, and it lasts another 4 months.
Okay, so what will be the unemployment rate with the removal of JobKeeper?
If JobKeeper was, well, it depends when you remove it. If it was removed right now, then the next month's unemployment rate will be significantly higher than it is now. But that's not the Commonwealth's position as far as I understand.
Daniel.
I think, Mr. Walters, what my colleague is getting at is that the expiry date for JobKeeper and JobSeeker, the elevated payment of JobSeeker, is 30 September 2020. On 1 October 2020, what impact do you think the closure of JobKeeper will have on the New South Wales unemployment rate and the New South Wales economy?
There is a risk that if we get to the end of September and both JobSeeker is wound back to the original amount and JobKeeper no longer is available, then there could be an increase in unemployment. But I don't have a precise number around that.
It's also,
Okay.
it's also
Sorry, Ms. Wilkie.
dependent on how restrictions have been eased over the forthcoming 4 months. I mean, one of the reasons we have people being stood down from work at the moment is because their businesses are not being allowed to operate. So if we have significant easing of restrictions between now and September, the ending of the JobKeeper program may have very little impact on the unemployment rate because those businesses are back operating and people are back in work. So
I accept the logic of that.
Sorry?
Oh, sorry, you can please. Sorry, I thought it was late, which made me think that maybe you had stopped. But sorry, Ms. Walker, I didn't mean to cut you off.
Well, it's just the impact of the end of the JobKeeper policy significantly depends on what is happening in the economy at that time as well. It's not, I'm certainly not assuming that we will have the same level of restrictions at the end of September as we have right now.
Yeah, I understand the point you're making, Ms. Wilkie. But right now, 60% of people in the labour force are either on JobSeeker or JobKeeper. That's just the stats. And that's huge. It's unprecedented. We've never had such a scenario in which so many people have depended on those type of schemes for their primary form of employment. And I accept your point that the economics of this turns on what's happening in the broader economy as to whether or not they can be returned to employment. But what I'm asking is what work is Treasury doing to model this? And surely you would agree that should that program come to a closure and we haven't got and we're in the context of the U-shaped recovery that Mr. Walters described earlier, then a sudden removal of the JobKeeper program and the reduction of the JobSeeker payments will have a material impact on the economy. Do you agree with that?
No, I don't actually believe that follows because, as I said, it depends on what restrictions have been lifted by the end of September and the number of businesses that have been able to reopen. And therefore, there may be people who are no longer sitting at home on JobKeeper. They may very well have picked up. They may very well be back working in the businesses that they're employed in. So it significantly depends on what is happening in the economy at the time the JobKeeper program ends.
When JobKeeper place, it was assumed that the economy would be shut down for 6 months. And as Ms. Wilkie's been saying, we're actually lifting restrictions a lot earlier than that. So there's a lot of uncertainty around this. As Ms. Wilkie said, we just don't know what will be going on with the underlying growth in the economy.
Mr. Pratt, in your opening statement, you referred to the easing of restrictions, and we see that there's going to be an easing of restrictions today. So, and you said that that would be a measure of recovery. So what practical measures, or how is New South Wales Treasury measuring the impact of the easing of restrictions that are taking place today?
There is a process that we are following, Mr. Secord, which I'll get the Chief Economist to talk to the economic piece directly, but we are working closely with health on all the areas of easing of restrictions. Many of those have already been flagged through the National Cabinet and the Prime Minister in what you would have seen publicly announced. We have used that to really inform our own framework as well. And so every week there is a process to look at what those set of restrictions might be considered going forward, in what time frame. And that is done in conjunction with health and Treasury. Now, the primary lens on that, of course, is health, as it should be, but we're having direct input into that. So if you wish, I can get Mr. Walters to talk directly to our input as well.
Yes, I'm very interested on the practical measurement and how you're actually going to determine it, yes, from an economics standpoint.
So, Mr. Secord, as Mr. Pratt said, we've had intimate involvement with health and other agencies across government to examine both the impact of the restrictions of work put in place and the economic benefits that accrue as those restrictions are lifted. So there's all sorts of detailed work that's been done within Treasury, for example, about getting children, as many children as possible within the health advice restrictions back to school. We know that has an enormous benefit to workplace productivity and that it does increase available supply of labour. So there's a big, that's one example, is if you can get children back into school in a safe environment, there's a big productivity boost to the economy. We know there's other economic benefits associated with opening retail outlets, or encouraging retail outlets to open again, allowing people to gather in public places in limited numbers, allowing people to access cafes and restaurants for sit-down meals again. We know it has big economic benefits. And we've worked through all of these individual restrictions that have been put in place with advice from health, as Mr. Pratt said, to make sure that we're balancing both the health outcomes against the benefits to the economy as we lift these restrictions.
Well, just want to take a look.
Mr. Secord, I'm sorry, this round of questioning time has expired. We're going to move on to Ms. Abigail Boyd, and then we'll come back to the opposition. Ms. Boyd.
Yes, hello. So it's Abigail Boyd for Hansard's benefit. Thank you, all of you, for attending. Just my first question: where is the Treasurer? Why is the Treasurer not here?
I can't speak for the Treasurer on this board.
You don't know why he hasn't attended?
You'd have to ask him that question.
Okay. Just picking up off of the discussion that was just being had in relation to the real levels of unemployment, I do understand that when we're looking at the JobKeeper figures, we aren't clear as to how many of those people will be able to return to work with their employers once the JobKeeper supplement is lifted. Have you done any analysis, or do you have any figures as to how many businesses currently receiving JobKeeper are likely to fail before those restrictions are lifted?
So, Ms. Boyd, I mean, that's difficult to do any rigorous analysis on as part of the work that we're doing to understand the impact this crisis, the pandemic has had, and the restrictions have had on business and the economy. We run regular business liaison sessions with a whole heap of industry groups. And so at the moment, the main way we're sort of getting information on that in the absence of hard data through the ABS or other data sources through the business liaison work that we're doing. And to be honest, the business associations themselves are unsure of what the answer to that particular question is at the moment. There is anecdotal evidence that we've all read in the press about JobKeeper is the only thing that's keeping some businesses live or viable at the moment. But, coming into the city today to do this, I saw people sitting, cafes that are open today that weren't open earlier in the week, because people sitting in the cafe eating. So there are businesses that have reopened. And so,
sure, but
so,
we could all look at the areas around us and say, well, there's a business open, so it can't be that bad. Clearly, it is a lot worse than that, and it goes a lot deeper than just the cafes. Obviously, if we're looking into the future and working out what the effect of lifting JobKeeper is going to be and how much of a shock that might bring in its own to the New South Wales economy, having the figures as to how businesses are likely to do would be incredibly useful, wouldn't it?
So, yes, of course it would. But what I'm saying is we don't necessarily have, no one has those data sources available to them. Wages and salaries are obviously a large portion of any business's costs, but if a business is not going to reopen, if people are not going to come through the front door as well. So there's the supply aspect of the labour being provided by employees and having employees available, but there's also a calculation that needs to be made from a business's perspective about how many customers they're going to have coming through their front door. So New South Wales never closed down the retail sector, for example, as part of the public health orders. However, we're all very aware, we've been well aware of all of the businesses that decided in Westfield shopping centres and whatever to close their doors because there wasn't the foot traffic in the mall. As people have felt more confident about going out and some of those restrictions about reasons for leaving your home have been lifted, the mobility data is showing significant more movement in shopping centres and that sort of thing. And indeed, the bank data that we're seeing in terms of consumer spend has seen consumer spend in those sorts of stores coming back up. So we have that sort of information that we are able to extrapolate from that, but in terms of the sorts of numbers of businesses that we think will reopen, but it's not an exact science, and JobKeeper is only one of the costs that businesses face.
Of course, and sorry.
Through our network, through business, every week we have regular business calls, be it corporate, SMEs, middle market. I do expect, though, that to your question, we are going to see many businesses remodel the way they operate. And if you look at online sales, they have spiked. I do think many businesses will use this period to rethink their operating model, and that's particularly using technology and online selling, but also shopfront. An example of one, my wife's hairdresser now is going home to home, has no intention of reopening her shop. So the impact of this will be significant. We can't answer that question at this point, but we are trying to collect as much data as we can to help us inform that.
And I guess, and that's really at the heart of my question. So if you look at whether or not the federal government should be doing something more to ease that cliff, I guess, of if they do stop the JobKeeper payments as of September, the sort of secondary shock that will have on the New South Wales economy, if we end up with then having a huge number of people who have no job and no JobKeeper payment, what do we do about that, particularly when we think about the number of people who have left have left looking for a job because they're now caring for somebody at home, or the circumstances of the restriction have made it so that they can't get a job, so they've temporarily stepped back out of the labour market. When these people go back in, as well as all of those JobKeeper people, we have some estimates saying that Australia's true unemployment rate is around 20% at the moment, if you consider those factors as well. If that's the case, we have a massive shock. So my question is, what are you doing to model for that and to prepare for it?
Ms. Boyd, I don't actually accept the premise of your question. The assumption you're making there is that the economy stands still between now and the end of September when JobKeeper comes up. As we've already said a number of times today, restrictions are lifting. All going well in the health aspect of the pandemic. restrictions will continue to be lifted, which means that businesses will come back, businesses will start reopening.
Okay, but
From being stood down to being back working in their business premises, it's not, I don't think it's a lay down misère to say at the end of September we'll have the same number of businesses closed as we have right now. In fact, I think
I completely understand the idea that it's not going to be a sudden lift and suddenly we're back to quotes normal, and that instead there's an assumption that the business will pick up as restrictions are lifted. You seem quite happy to be thinking about that in your assumptions, even though there aren't specific statistics to back that up, and there doesn't seem to be any work to work out why you think those businesses will open. And yet, when I suggest we should be looking at, how many businesses are actually going to go under after JobKeeper's lifted, no work is being done into that, and that seems to be an assumption we don't need to make. Yes, there's uncertainty, but wouldn't you be looking at both of those things?
we are looking at both of those things. We may not have the numbers, but that doesn't necessarily, we may not have the numbers yet, but we are looking for all of that evidence. It's that it doesn't exist at the moment is part of the issue, but you can't, I guess, you can't assume that everything will be the same, but you can't also assume that it's going to be all completely different. Of course, it's going to be somewhere in the middle of those things. I guess what I'm objecting to is that, you two can't have it both ways that you're trying to argue it, that we are going to see more businesses reopen. They may not all reopen, but that means that the cliff that you're talking about, presuming the JobKeeper, is not going to be the same cliff that it would have been if no more businesses open. So it's working out what the implications are. As Mr. Pratt said, businesses may not open in the same way. So you may see, the consumer sentiment data is showing that more and more people have done online shopping for the first time across a broader spectrum of product categories than they've ever done before. And they are indicating that their intention to continue shopping through online channels is increased from what they had previously considered doing. So that means that for some shops and for some of the retail sector, may not be viable, or they may not need to reopen all of their bricks and mortar storefronts, which might mean that they don't need as many employees because they've got a warehouse where they're filling in online orders versus having people in the store.
Okay.
So they may reopen, but the employment implications are not straightforward.
Yeah, so we're looking at different factors that may counter each other, they may not counter each other. As you say, some businesses who are on JobKeeper will not, they will continue to get business and they won't need to rely on JobKeeper. But then there are a whole bunch of others that presumably won't have that same success. And my question to you, given the job of Treasury to look into the future and try and prepare for those shocks, my question was, how much of a cliff will that be then? When JobKeeper is cut off, how many people in New South Wales will suddenly be in the unemployment market and added to our official figures?
Well, as Mr. Walters has said, we're doing that forecasting right at the moment. And to be honest, I can't give you a number on that because it's so dependent on what happens between now and then. That's the sort of area where we have to start doing scenario analysis, because the extent, the number that might be is highly dependent on whether we have, we have, God forbid, a re-emergence of the virus and broad community transmission, and we have to start putting restrictions back in place. That will mean that, if we need to do that, then that's a very different scenario than if we are able to maintain the current situation and we continue to lift restrictions so that we've got, as per the National Cabinet's 3-stage process, where we get to sort of middle of July and we've got everything but international borders open back up. Those are very different scenarios and they have very different implications for employment, business openings, and what happens with
Is
It's
it
a
job?
good
Sorry,
question.
go
If I
ahead.
could just add, I mean, it is the difficulty we have answering your question at the moment. It is this interplay between what restrictions are lifted at what pace, and so we go back somewhat to a world as we knew it potentially. What new business models may emerge, and there will be, and then what existing businesses will change the way they operate. I mean, a classic example for you at a higher level is Australia Post, who over a number of years have seen their traditional letter business revenue fall out the back. Suddenly, you want to be in the parcel business. You know, with online deliveries now just lifting in staggering numbers. That is an example to me of a remodel business opportunity, and we are going to see that.
Mm.
We are getting intelligence from the market every week at all three levels of business, as I've indicated. I've challenged our economists now to try and start making sense of that, exactly to the question that you're asking.
And I thank you. And I that's what I'm getting at. You know, the job of Treasury, correct me if I'm wrong, is to predict, not to predict, but to prepare us for the unexpected. We can all look at what's happening now and think about what might happen. But if we have a possibility of a shock from the JobKeeper payment being removed, or from a number of people coming into the workforce who have not been able to seek employment during this time because they've been caring for children or whatever it is, or as Ms. Wilkie says, if you end up with a second wave and we go back down into a semi-lockdown, what are the preparations for that? What is Treasury doing to prepare the state to withstand that better? So
it's taken on board, thank you. You know, we're focused on doing it, but as you'd appreciate, any model is only as good as the data we put into it, and
yes.
and therefore we're getting as much data as we can.
And the answer is we are looking at all of that stuff, but we don't have hard answers. Nobody has hard answers on that at the moment.
No, and I don't expect you to have hard answers, but I expect you to be preparing for the worst. So can we just look, speaking of the worst, can we look at youth unemployment? Youth unemployment before COVID-19 was more than double the rest of the population. And we know that young people make up, the majority of the casual workers, and workers in sectors like retail and hospitality that have been really hard hit. Do we have any visibility on the rate of youth unemployment in New South Wales at the moment?
I'll get Mr. Walters to deal with that.
We do, Ms. Boyd. So that approached 14% in yesterday's numbers. So you're right. We know that younger people typically are exposed to casual jobs and also part-time jobs. And we know that the fall nationally, there were far more part-time jobs that were lost than full-time jobs. And that reflects the fact that it was a lot of hospitality, retailing, accommodation, arts and recreation type roles were lost, many of which are part-time in nature, casual in nature, and also employ younger people. So I was not surprised at all that youth unemployment rose a lot. That's the nature of this crisis that we're facing here. It's the type of jobs that have been lost are those that are typically held by younger people in a part-time or casual role.
And what about the numbers of, in terms of hours worked? What was the reduction like for youth?
We don't get those numbers for youth in terms of hours worked. The only hours worked measures we get are across the entire workforce.
Yeah, okay.
So we know that nationally there was a 9% drop in hours worked last month. That's the biggest drop in hours worked we've ever seen. Just to clarify that, that's not those that have just gone further into underemployment. That's across the entire workforce. So it takes account of people who are working more hours. It takes account of people working the same hours and those working fewer hours. Now, in New South Wales, that was slightly larger at 9.2%.
Mm-hmm.
So similar. And I think this is probably going to be a recurring theme as we get these employment numbers each month, that unemployment will be going up. And I've mentioned 10% as the Commonwealth and Reserve Bank forecast. That seems about where we're headed in New South Wales, as I said earlier. But I think what you'll see is even a larger decline in hours worked. So people will retain employment, but we're working fewer hours. And to give you a benchmark there, the Reserve Bank's forecast, and they, as I said earlier, have released detailed forecasts. They're expecting a 20% drop in hours worked in the current quarter, and yesterday we saw a 9% drop, so almost halfway.
They're sobering figures, and I think when I reflect back on the global financial crisis and the experience in Europe, in many countries during that time where youth unemployment rose and didn't really recover and hasn't recovered in some of those countries a decade on. Obviously, when young people become unemployed at an early stage, there's a knock-on effect to their future employment. What is the New South Wales government doing to ensure that those young people that they have jobs to go to when this is over? Is there going to be a focus on young people?
Well, that's really a question for the government itself, Ms. Boyd. I can't answer that at this point in time. I don't have policy work going on. The point's a valid one. I'm sure the government would note that.
Yes, it's a shame that the Treasurer isn't here to answer that question. Along a similar lines, I think it's probably the last question I'll have time for. I understand that the decline in hours worked has disproportionately affected working women who have seen their hours drop by 11.5% nationally compared to 7.5% for men. Do you have any figures in terms of women unemployment and under hours being less than pre-COVID for New South Wales?
Ms. Boyd, it's true that both in unemployment, the percentage of jobs lost and the percentage of hours that dropped has disproportionately affected women. That's true. And there's a couple of reasons for that. Women are more likely to have part-time roles. That's a fact in the statistics out of the labour force. And also, as I said earlier, the parts of the economy that have been affected are typically those areas that have a higher female participation. So it's true, it's been a disproportionate impact on both women, females and youth.
And I won't ask the follow-up question because you'll tell me that I need to ask the Treasurer that. I think that's the end of my time. I might leave it there, Mr. Chair.
Thanks, Ms. Boyd. Very generously handing 20 seconds to the opposition. Mr. Secord. I think you need to press mute, Walt, or unmute.
Okay, is that okay?
Good now.
Yeah.
Good now.
Thank you, Mr. Schubert. Mr. Pratt, what date is New South Wales Treasury working towards for this year's budget?
Mr. Secord, the government hasn't set a date as yet, but has announced that it will be towards the end of the year. The Commonwealth budget will be around October, as you know, the Prime Minister has publicly announced. In terms of good budget process, it's really important that we follow the Commonwealth budget because obviously we extract a lot of important data from that budget, principally revenue, GST related, and so on. It's also important that we get as much experiential data, our own actual data over a period of time to maximise our certainty around forecasts. So it will be towards the end of the year. I'm not sure when the Treasurer will firm up on that, but that is his decision.
Now, on the issue of monthly statements, the March monthly statement is the most recent. When will we expect the April monthly statement? Should it be out now?
It's being worked through right now. I'd expect it very shortly. The reason for the delay, and I know you appreciate this, but with agencies working through a lot of COVID issues, it has been concerning about their ability to produce the monthly data as we would normally do in the time frame. The requirement, as you know, is 30 days after the end of the prior period. The March data is up. We're working now on the April data, but there is 150 odd agencies of government that need to prepare all their data, and in the midst of addressing COVID, that has been challenging, but I expect it will be up very shortly.
Thank you. So shortly. Okay, thank you. There was a report that we received last month on Standard & Poor's moving S&P, revising the New South Wales and Australian economy outlook from stable to negative. Have you had meetings or discussions with S&P since then?
We've had a brief discussion with both of them, to my knowledge. I mean, there is an ongoing dialogue with Treasury, with the rating agencies, and as you rightly point out, the rating agencies, Standard & Poor's, changed the Commonwealth's rating from stable to negative, but left it at AAA overall. We follow that rating, so we can't be rated as a sub-sovereign higher than the sovereign. So at that point, when that change was made, we also moved to negative watch. But we are having regular discussions with them, yes.
Now, you referred to S&P. What is the situation with Moody's?
No change at this point, Mr. Secord. I'm not aware of any plans to change in our discussions with them at this point. So important to note, the government is still enjoying a AAA rating, and at this point, I'd expect the rating agencies will monitor us over the next 6 to 12 months. What they want to see is discipline in fiscal management. They want to see the continuation of our strong balance sheet, and we'll have this ongoing dialogue with them. But at this point, no change.
Now, does New South Wales Treasury have access to reports on the Australian and New South Wales economy involving Fitch, which is the third ratings agency?
I'm sure we do. I don't see Fitch reports myself, but I wonder if Mr. Wallace does.
I don't either, Mr. Secord, no.
Thank you. Just one follow-up question arising from my colleague's line of questioning. The standard period between a Commonwealth budget and a New South Wales budget is generally 5 weeks, I think. Is that still the intended gap, regardless of when the Commonwealth, or do you think you're going to need more time?
Look, I really can't answer that, Mr. Mookie. I mean, it will be a decision for the Treasurer.
Okay, I understand. Can I just turn to another subject, which is, of course, the employee expenses aspect of the New South Wales budget. Has the government asked Treasury to prepare advice on changing the policy, the wages policy?
Yes, it has.
What advice have they asked you for?
They've asked us to look, and I might just add, Mr. Mookie, it's obviously not just wages. I mean, we are obviously looking in detail at our whole fiscal approach across all expenses. But to your question,
of course, I expect you would, but I'm just interested in the wages dimension of that, Mr. Secretary.
No, I appreciate that. Wages, the point I was going to make is that wages is 46% of our expense line, so it's a very important aspect of our expenses. Yes, we've been asked to do some work that is being done currently for the government, and they are looking at that matter.
So what have they asked you to do, Mr. Secretary?
Well, they've asked us to review the current position. They've asked us to look at a number of different options, and we are currently doing the costing work on those options.
Which options have they asked you to look at, Mr. Secretary?
I'm not at liberty to talk about those options, Mr. Mookie. They are cabinet in confidence. Okay,
well, one aspect that has surfaced in the public debate has been for the wages of policy to be adjusted from a 2.5% increase to a 0% increase for 12 months. Are you able to confirm that that's one of the options you're looking at?
No, I'm not.
Okay, another one that has floated in the public domain is that there'd be a reduction in wage from 2.5 to 0 for the next 2 years. Is that an option that you've been asked to look at?
I can't comment on specific options, Mr. Wilson.
Okay, so I'm not going to ask you what the budget impact is because you have that in the budget paper every year, so please keep that up as well. But what I am interested in is, are you having a look at the economic impact of a reduction in the wages policy from 2.5 to 0 on household and consumer spending?
Any wages policy that we put forward to the Treasury and to government clearly has a degree of rigour and analysis, including economic analysis around it, yes.
So you accept that there is a link between the wages policies of all employers and household spending, including the New South Wales Government?
Yes, absolutely.
Yeah, and you accept, of course, that in a recessed economy, when households spend, economic activity tends to lift?
Yes, I do, but I guess there's a question of balance always in these matters, isn't there? Because you've got the economic challenge, but at the same time you've got the fiscal challenge. And to Mr. Seccord's question, you've got rating agencies who are wanting to see strong fiscal management. So with all these things, there is never a black and white response, I'd suggest, Mr. Mookie. It's a question of what is the most preferred option in those circumstances.
Oh, look, of course, Mr. Secretary, I agree with you. The entire economics profession is built around being able to provide advice about different options and different scenarios. So I don't disagree with you at all, but I'm asking, you do accept that adjustment to a 0% wage policy, if it was to be adopted by all employers in Australia, would, for example, have an economic impact?
One would assume that it would lessen spending, yes. On the other hand, are there benefits to be gained more fiscally in terms of that outcome? Look, they're issues that we are working through.
Of course. So can I just put to you just a couple of views that have been put by various economists on this question and ask for your response? Richard Holden, who's a professor of economics at the University of New South Wales, speaking about the prospect of the New South Wales government adjusting its wages policy from 2.5% to 0% for the next 12 months, says cutting back on public sector wages would counter government's efforts to boost the economy. He goes on, the last thing you want to be doing as a government, which can borrow cheaply during this kind of downturn, is the opposite of stimulus, which is what cutting back on public sector wages would be doing. Does Treasury agree with the Professor Holden in that respect?
Well, I'll get Mr. Walters to comment, but I just make the preface comment that you can't look at these things in isolation. Comment I made earlier. I haven't seen his commentary, but Mr. Walters, did you want to comment on that?
Mr. Mookie, nor have I seen Mr. Holden's analysis either, but look, as Mr. Pratt said, there are choices that have to be made about the way public sector funds are deployed, and not all spending or payments by a government in an economy have the same economic impact. So as a general point, yes, obviously if you're giving someone more income, their spending may go up. But there are other priorities across government, and that's a choice for government to make. It's a decision for government.
So I accept the logic of what you're saying there, Mr. Walters, and I understand that it's a question for government ultimately to adjust for these priorities. But you, as the leading advisors to government, you accept that there is a trade-off between if the government was to privilege the state of the ballot or budget, that may well have an impact on the state of household spending, which is really the core of it. We're not asking you to take a policy position in this debate. We're asking you to provide a view as to what you think the fact-based scenario is. So if the government was to decide that the importance of budget consolidation takes precedence over household spending, they would drop the wages policy. But if they were to privilege a view that the obligation is to stimulate the economy, they would maintain the wages policy. What I'm asking you is, can you want to provide on the economics of both scenarios?
I don't agree with the premise of what you said. It's not a choice of budget consolidation or paying more wages. You can still be implementing different policies that end up with a less consolidated budget position. One doesn't follow the other.
I'm going to put to you the view now of another economist and just ask for you to respond to that as well. Danielle Wood, who's an economist at the Grattan Institute, said in the short term, the economy will be extremely weak and governments should be thinking about how they can support demand. Cutting back now is exactly the wrong answer. Do you want to reply or provide any views on that?
Cutting back now
is exactly the wrong answer.
What But cutting back what against
Wages. Wages. Public sector wages. Exactly the wrong answer is the view that's been put forward, because it will have an impact on household spending at a time where we'd like households to be spending so those businesses can resume trading, so they can resume employment. Do you have a view?
I've not seen Ms. Wood's work either, so I can't specifically comment on what assumptions she's making, but the premise that if we're paying people more money, they would probably spend more is true.
Yes, that's economics 101, marginal propensity to spend. I accept that. Okay, we'll move on. Mr.
To save, and the interest rate cuts we've seen over the past year to pay down debt and save rather than to increase consumption as well. So there are a number of different variables here that would need.
I accept that there are a number of different variables here. I'm just specifically getting on what provides as New South Wales Treasury providing to the Treasury as to that impact on households should one of Australia's biggest employers cut its wages policy. That's all. If you want to add anything further, please.
I can't talk about the various options as I've indicated.
Can you tell us the time frame for those options to be considered?
What's that, Mr. Searle?
I'm sorry, Mr. Searle.
Sorry, that's Mr. Searle coming through. Mr. Pratt.
Yep, Mr. Pratt, can you tell us about whether there's a time frame for those options to be considered?
Look, again, Mr. Searle, that's to the government. I can't answer that question. I have confirmed that we are looking at it, but it will be the government to determine that time frame.
Thank you.
Mr. Pratt, on the weekend, and I welcomed this, and so did my colleague, the Honourable Daniel Mookie, the easing of restrictions on auctions and inspections on the weekend. What was the impact or response to the easing of restrictions last weekend?
I'll get Mr. Walters to give you the numbers, but we did see an increase in New South Wales over the weekend, and whether that was directly causal or not, I can't say, Mr. Secord, but Mr. Walters, you have some numbers.
Yes. So, Mr. Secord, until the easing of those restrictions, when online auctions were the only viable alternative, as well as inspections, since they went to restricted in person for both auction and inspections, the auction clearance rate went from about mid-30s. So in other words, only 1 in 3 auctions were successful to just over 60%. So almost a doubling. So
thank you.
Mr. Pratt indicated that could have been caused by something else. But logically, I would have thought there's an impact of lifting those restrictions, got more people out looking and inspecting homes and actually participating in auction.
Sorry, there was a little bit of an audio glitch here. Did Mr. Pratt want to add or make an observation there?
I was just referring to something Mr. Pratt said earlier, that it could have been caused by other factors as well.
So what were those other factors be?
Well, we don't know. It could have been a lifting in optimism generally. We know consumer confidence went up strongly this week because other restrictions were lifted.
Right.
So
thank you.
But I think it's a reasonable assumption to make that lifting the restrictions allowed people to be more active in the housing market, both especially participating in auction.
Thank you. Mr. Secretary, I just want to turn to another matter. I think my colleague made a reference to this earlier this morning, the Premier's comments that she expected the budget to be, I think it was a Premier, a $9 billion deficit. And I think you may have confirmed that in your opening statement, but I may have heard you wrong. Is that for this financial year or for the coming year or the calendar year? What period of time are we talking about?
Well, I haven't heard the Premier's quote. I was just responding to what Mr. Secord asked, which I heard incorrectly, Mr. Secord, if I didn't hear correctly. But I thought the question was a $9 billion reduction in revenue over the next 2 years.
She did. She said that at the press on ABC Radio. She said there was a $9 billion reduction in revenue.
Okay, yeah. Sorry, my mistake.
Yep. So what?
So I was confirming directionally that to be correct. Yes.
Yes. So what is okay? So March 2020, the end of the month, the monthly statement said that we were at a $320 million surplus. So if we've had a $9 billion loss in revenue, are we now in deficit $8 billion? Is it as simple? So what is the current deficit?
Well, it's not as simple as that, as you would appreciate. I mean, if you simply took the proposed forecast surplus this year in the half-year numbers of 702 million, each of us can do the back of the envelope calculations, Mr. Secord, in terms of packages that we put out around expenses, in addition to the half-year related to COVID. You could also look at revenue foregone with announcements that have been made. You could look at revenue deferred, and clearly you end up in a significant deficit as a result of that. But there are so many moving parts right now, I cannot give you, an exact number on what that will look like at this point.
But just look, I mean, again, just following the logic of what you just said, Mr. Secretary, a $9 billion downturn in revenue would take projected revenues from $84 billion, which was the sort of the financial mid-year statement, certainly the June position, down to 76.
Sorry,
75 billion. That layer on the additional spending. I mean, we're looking at a deficit that's certainly looking at this point in time to be circa somewhere between 8 to 12 billion. Is that right as a range that we can expect?
Well, I've just said that that's the back of the envelope calculations, if you're doing both of those.
Look, we're not critical.
But look, there are many moving parts. So I'm not going to be quoted on a number today, Mr. Mookie, because we just don't know at this point.
So on the
billion revenue is over 2 years.
Yeah, I get that. And okay, right, that's important. I accept that too. But the point is that do you anticipate the budget to return at any element of balance over the forward estimates?
Again, I'm not trying to avoid your question. We just don't have that degree of information.
But it's not unreasonable to assume that it won't unless there are major policy changes.
Well, the biggest challenge, which I'm sure Ms. Wilkie will have a view on, but is trying to get accurate forecasts of revenue is extremely difficult, which is why my response to your earlier questions about timing of budget, it's really important we get Commonwealth revenue numbers, and it's really important we get as much of our own data as possible before we put in our own budget. So that's the difficulty we have.
Well, I accept that, but the Commonwealth share
Mr. Mookie, I'm sorry, your time's expired in this round, so we'll pass over to Ms. Boyd.
Oh, thank you very much. I just wanted to start with international students. So there are 400,000 international students enrolled in Australia, and around 36% of them are enrolled in New South Wales, so around 145,000. What is the economic benefit of international students to New South Wales? How much do they contribute to the economy?
I'll get Ms. Wilkie just to check that, but it is our number one service export, as you'd be well aware, number two overall, and it's critical to the New South Wales economy. I think from memory, I get this number checked, Ms. Boyd, but I think the last number I saw was around about 12 billion.
Right.
Was the number. It's very significant. Is that correct? Yes, it is. Right.
I've been very concerned to see a lot of international students being filmed lining up for food handouts and really struggling because they've lost their casual and part-time income like so many others. Other states have committed really significant funding to their international students to help support them. Victoria, which has a similar number of international students, has pledged 45 million to support them. South Australia is giving 13.8 million, even though they have a much more reduced number. Tasmania 3 million, Queensland 2 million, the ACT almost 500,000. However, in New South Wales, it's my understanding from what I've read that there is zero targeted support for international students or other visa holders. What plans are in place to support international students, given how vital they are for the economy?
Yes, it's a good question. Look, it's part, as we've worked through responding to sectors and the various packages, the university sector is the one that we have not done yet, to your point. But a lot of work has been done on it, and I've been talking regularly with Vice Chancellors. I had a phone hook up on Friday with 10 in New South Wales. We've got a lot of feedback from them. So you'll hear something very shortly on this, I would expect next week. 2 packages went to ERC yesterday and were approved, and they will deal, I suspect, to a lot of the questions you might have in this area. So I'd expect next week at some stage, Treasurer and Premier will announce those.
Thank you. That's positive news and good to hear. So has that been developed in discussions with universities and TAFEs?
Absolutely, very much so, yes, which is why, to your question, why there's been some delay, because I wanted to ensure that we were addressing the right things.
Do you think that delay has impacted Australia's reputation in relation to?
It's very hard to make a judgment on that. I mean, it's not, to your point, it's not a good sign to see international students lined up, accommodation challenges, food challenges, have lost their job, etc. I fully agree. And no doubt some of that is going back home to wherever that might be. But when we do announce, I think this will address, in fact, I'm confident it will address a lot of these issues.
I really hope so. Thank you. For the COVID-19 crisis, statistics, again, that I had read from organisations such as NCOS, were saying that there was around 13.3% of all New South Wales people living in poverty. Do you have any current statistics for how many people would now be living in poverty in the midst of COVID-19?
I don't, Ms. Boyd, I'm afraid, no.
No, look, we could come back to you, Ms. Boyd, on that. We don't have that data with us, I'm sorry.
Along with the rise in unemployment, which, as you say, you expect to be quite significant for some time, and granted that we don't know what the exact impact in terms of unemployment will be because we don't quite know what the timeline is going to be for recovery, unemployment goes hand in hand with increased homelessness. Do you have, has there been any, I guess, analysis done as to the expected increase in homelessness, and are there any plans in investing in social housing?
I'll get Ms. Wilkie just to find the numbers, but part of the packages that we've announced is a quite significant investment in social housing. So we'll get those numbers for you and then we can give you the detail.
So there was the part of the first support package included measures for homelessness. So between the 1st of April and the 13th of May, some 6,000 people have been provided with temporary accommodation, of whom about 1,000 of those are rough sleepers, and about just under 300 of them are rent choice packages that have been provided to vulnerable households seeking tenancies on the private rental market. We had been targeting as part of that package having temporary accommodation for 600 rough sleepers, so we oversubscribed on that, which is a good outcome, and there were 500 rent choice packages that we were targeting, so there's still space, I guess, for that, for further to be done in that space. So that package has had good uptake. There is further work going on at the moment about, as you said, the increase in unemployment that will inevitably have an impact on poverty, homelessness, and other issues like domestic and family violence. So there is work going on at the moment to understand what that increase in in service requirements is likely to be, and advice will be being provided to the government on what we need to do or what the recommendations in that space are.
I just add, Ms. Woggy, that there is also capital investment. So this was in two areas. In Aboriginal housing stock, 13.5 million has been allocated to roof replacements, installation of security screens, hydro panels, etc. And then more broadly in social housing infrastructure, there's a commitment of $47 million this financial year for maintenance works. To date, nearly 6 million of that has been spent, and 211 dwellings have been repaired or upgraded.
All of that is good news. Like, it's always good that we have investment in any level of social housing. But given that there were, did you say 16,000 rough sleepers that found temporary accommodation? And the figures I'm reading is anticipating another, like basically a doubling of the number of homeless people in New South Wales if our unemployment rate effectively doubles. What is being done to invest in more housing stock? So I guess two questions. One is, what happens to people once their temporary accommodation option runs out after COVID? Presumably they're put back on the street. And secondly, are there plans to actually invest in new housing stock?
So those are issues that are being actively looked at across government at the moment, and advice will be going, as I just said before, advice is going to government shortly on those.
Okay, so when will we know more about that?
That's up to the government to determine after they've considered those issues and made decisions on it.
When do those temporary housing arrangements run out? Is it when the hotels decide that they can get people to pay for rooms? Is this the hotel room?
I think we have a date on that.
I think it's June, July, but I don't have the exact date with me. I mean, the transition issue that you mentioned is one of the things that's being looked at the moment.
Yeah, I mean, being chucked back out on the street in the middle of winter is obviously pretty grim, and I'm sure those people are keen to find out what's going to happen to them. Okay, I think my time is... Yeah, sorry, I think my time is up. I'll go back to David.
Oh, thanks, Ms. Boyd. And Mr. Pratt, did you say you'd be able to come back with some further information to answer that question from Ms. Boyd?
Yes, we will, Chair.
All right. Thank you. Mr. Pratt, New South Wales is the largest employer in the country, isn't it?
Yes, it is.
Do you know how many people are employed by the state of New South Wales, or as best you can, the most recent figures you have?
Look, I don't have the up-to-date figures with me, Chair, but as I understand it, it's in excess of 400,000. That entails all frontline as well. So that is police, nurses, etc. That's the total workforce.
The figure I had was about 469,000 employees in New South Wales. Would that be about right?
That sounds a little high to me, but I understood it was around 400 to 420,000. But we can get that number for you.
I appreciate that. What proportion of those employee numbers are affected by the wage cap policy?
Look, a large proportion would be. They would all have awards coming up at various dates. Not all are due on the same date. But again, that's a question that we should put to Industrial Relations. I can't give you the detail on that.
All right. To the extent that there are existing award entitlements entrenched for a pay rise going forward, does the Treasurer have the capacity through his wage setting powers to prohibit or in fact reverse those entrenched pay rises that are contained in existing awards?
I don't have that information, I'm sorry, Chair.
Well, I mean, the most obvious case would be teachers and in questioning with the Education Minister this morning, when we asked about that very question, she said to refer that question to you this afternoon, Mr. Pratt. So that's good news for you. So teachers have an entrenched award entitlement for a pay rise. Is there a capacity, without going back to the IRC, for the Treasurer to reverse that pay rise through wage control measures that the Treasurer has?
I'd have to take that on notice. I mean, we don't have control of industrial relations within Treasury. I think you may be aware that sits with Premier and Cabinet, and they would be the people addressing the various powers and controls in those issues. But I'm happy to take it on notice on their behalf if you wish me to.
All right, I appreciate that. Mr. Pratt, do you accept that if the New South Wales Government, as the largest employer in the country, imposes a wage freeze, that that's going to have a very real and negative effect on overall demand in the economy?
Well, we've addressed that earlier, Chair, to Mr. Mookie's questions. As a principle, I think the three of us here have agreed with that. But as has also been pointed out, one cannot assume that any increased wage power goes into consumer spending. I mean, it will go, into paying down debt. I would think significantly in this environment, a lot of people will look at debt clearance. So, I can't specifically answer that, but directionally, yes, I agree.
Have you got figures as to what the cost of a 2.5% wage increase would be to the New South Wales Treasury, and therefore figures about what foregoing that would mean as a bottom line budget saving?
No, I don't have it with me, no.
Would you be able to provide those on notice?
Yes.
Is that a yes? Sorry, Mr. Pratt.
Yes, we can, yes.
Can you indicate what kind of figures we're talking about? In a state budget that's the order of $80 billion, are we talking about $2-3 billion saving, or what kind of quantum are we talking? What ballpark are we in?
Well, again, Chair, I really can't answer any detail of that, as I've indicated earlier with Mr. Bookie, because that is with Cabinet at this point.
Well, I'm not asking about the policy. I'm just asking about what the cost to Treasury is of a 2.5% wage increase, and surely pre-COVID, those sorts of figures would have definitely been to your fingertips, Mr. Pratt.
I don't have them with me. I could certainly get them for you, and I'm happy to take it on notice, but I don't have them with me, no.
All right. You said there are a series of productive conversations, as I understood it, with Vice Chancellors. Can you indicate which Vice Chancellors those conversations were with?
They have been with them one-on-one over a period of probably 4 or 5 weeks now, but also in small groups. Also with, you may be aware, Paul Wellings is the VC at Wollongong, is the chair of the university group in New South Wales. So we've had numerous discussions with him as chair. And then on Friday night, I did a Skype such as this with 10, I think 10 VCs were involved in that together.
All right. And did that include, that would have included obviously Wollongong, but did it also include Western Sydney, UTS, UNSW in Sydney?
Yes, it did.
All right. And can you indicate what regional universities were also included in that?
I'd have to check for you, but I think all 3 were represented. We're very careful to make sure that we get a total New South Wales view, not just a City of Sydney view. And so we have been having a good example of what I mentioned earlier. We've been having one-on-one specific meetings with universities for that reason, including the regionals.
All right. Was it an assumption in the conversations you were having that the package negotiated between the NTU and Universities Australia would be accepted by universities in New South Wales?
Was not discussed, Chair, in that forum.
All right. Can you indicate whether or not, in addition to potentially financial measures directed at universities, if the Treasury has costed financial measures directed to give direct relief to international students.
Sorry, can you repeat that?
Or in addition to measures that are directed to giving potential financial relief to the universities themselves, has Treasury costed options to give direct financial assistance to international students, given the level of need as articulated by Ms. Boyd?
Yes, we've been looking at a range of options, Chair, as I've indicated. You're probably no doubt aware, but international fee income in the overall operating statement of our New South Wales universities is in excess of 30% of their total income. So they are very dependent on that revenue. And the work we've been doing is how do we best underpin that in terms of supporting the universities on the basis that we carry them through a period where potentially that international fee income returns. There's some of the things that we've been looking at.
All right, thanks, Mr. Pratt. I understood from comments that have been made by the Treasurer that there are a number of options being looked at in terms of liberalising the economy, supporting new industries and startups. Is that right?
Look, we've just started work on a program of what we're calling recovery. We've been really looking at this work on COVID to date under what I call response. So how do we immediately respond to the needs of what we saw? We're now looking at recovery as the next phase of work. And in that, for example, we are looking at what projects we can get ready to go to market, so-called shovel ready, if you like. We're looking at other opportunities to speed up investment to not only retain but create jobs. So that's in the mix right now, and that's the work that we're doing.
Mr. Pratt, are you looking to put ideology aside and get rid of some long-standing debate, perhaps, and look at opening up and liberalising fresh industries that are billion-dollar industries in countries like the United States? And the two industries I've put on the table are the hemp industry and also legalising cannabis, which, as we know, provides hundreds of millions of dollars to state treasuries in the United States and is now a multi-billion-dollar economy in the United States. Are you willing to look at those kind of, overcome those ideological wars and look at those options?
Well, as you appreciate, Chair, I mean, I'm a servant of the government. I will do what the government asks me to do, the government at the time. I'm not directly looking in those areas, but if I was asked to do it, yes, I would. But, I would say to you that directionally, I think there is, and it goes partly to Ms. Boyd's earlier question, I do think we're going to see a very significant digital shift in the economy. And I think any government would be wise to look at that, specifically in terms of future investment and direction.
Thanks, Mr. Pratt. Some people have suggested if we legalised cannabis before this, some of us may have had a more chilled out lockdown. Do you agree with that proposition?
I can't comment on that, Chair.
Answer that.
Thank you. I'll hand over to the opposition. You're not coming through.
You have to unmute us. Thank you. You have to unmute us. Sorry. Thank you.
Well, you're officially unmuted.
Thank you, David. Okay, in the last bracket of questions from Ms. Boyd, Ms. Wilkie made reference to spending on homelessness and programs like that. How much is being spent on quarantining people in New South Wales at the moment?
Just see if we've got that, Mr. Secretary.
Ms. Wilkie was reading from a sheet of expenditure. I noticed that.
Yes. I'm not sure those numbers are there. We're just checking.
We have support package numbers with us, but quarantine is not technically
No, I don't think
considered part of a support package.
No, I think we'll have to come back to you. If I can take that notice, Mr. Secretary.
Okay, thank you.
Can I pick up another one? You would be aware that
with the governments is that the New South Wales cost would be for all New South Wales residents. The arrangement in each state is that the government of the state pays for all re-entry and then gets reimbursed by other states for those that are not resident in that state.
Thank you, Mr. Pratt. One of the measures that was taken by the National Cabinet early in the crisis, which was to join effectively the private health system to the public health system to allow us to maximise capacity. At the time, it was reported that the cost of that was $1.3 billion, and that the states would be paying half. How much of that is New South Wales having to pay?
I don't think we have a number I can give you, Mr. Mookie, but the arrangement is that for the hospitals, any future COVID treatment will be met 50-50 with state and Commonwealth. So it's related to future COVID treatment in private hospitals.
Okay, and what about the shift of elective surgery or otherwise to private hospitals that was also announced by the New South Wales Government, or at least flagged? Do we have a cost yet on that?
This is future elective surgeries?
Yeah, well, whatever capacity we are currently paying for in the private health system, which is additional to what we were paying for before COVID. I just want to know what exactly it is and how long it goes for.
Maybe I could just attempt to explain the agreement might help.
Sure.
The agreement with the Commonwealth is that any other surgery going on in private hospitals, in terms of their own operating statement, is for them, but the net of any capital returns that are made, then Commonwealth will subsidise that component if there is to be a loss. We're not involved in that by way of cost subsidy.
So the 50% component doesn't cover the loss aspect?
No, the 50% is purely COVID-related, COVID treatment.
Thank you. That's clarified it. Thank you, Mr. Pratt. That was quite helpful. Can I just return to the surplus budget deficit change? I think we, in the last round of questioning, established that it's not inconceivable that the result will be circa somewhere between 8 to 12 billion deficit, which is, depending on where you fall, a $9 to $13 billion reversal from the position that we were before. I don't think we ever got to the bottom of whether or not you think that within the forward estimates period that there will be a return to balance, a natural return to balance, absent any other policy choices by government. Probably the way to. Is that a reasonable assumption?
Well, it's work in progress. I mean, it really depends on what the government determines to do. Firstly, on expense management, and both of you have raised wages policy with me today. But also more broadly, I do expect that government will continue to digitise the way it interacts with citizens. I'd expect there'll be significant cost savings on the back of that, and a range of other things on the cost base that we should be looking at. On revenue, I'll get Ms. Wilkie to talk to that, but that's even more of a challenge, trying to forecast where revenue will be over the next 4 years. Our big revenue lines of GST, stamp duty, is very difficult. So did you wish to comment on that?
Yeah, so Mr. Mookie, as I understood your question, if we do make no other policy changes, would the budget return to surplus in the forward estimates is highly dependent on what happens with economic growth and therefore what happens with the revenue lines. I mean, it's almost a truism, an economist in fiscal policy, that in an economic downturn or a recession, the automatic stabilisers come into play. So your revenue falls as economic activity falls, and your expenditure rises because your unemployment benefits and welfare benefits. So more of an issue for the Commonwealth Government, given our constitutional responsibilities, but it does still impact the state government. So obviously, a fall in economic activity means the housing market comes off, so we're getting more stamp duty, payroll tax comes off as employment falls, and we also potentially lose other revenue through other revenue lines as well. So what happens?
So, Ms. Wilkie, sorry.
And then on what happens?
Sorry, Ms. Wilkie, if you shouldn't feel afraid to speak more loudly. It can be a little tricky hearing you sometimes, and Mr. Mookie and Ms. Secord, if Ms. Wilkie or the Treasury are speaking, if you can make sure you're on mute, that would really assist. Ms. Wilkie?
Yep. Did I need to repeat any of that answer?
No, I think I got the gist of it. There was a slight delay. That sort of made me thought that maybe it concluded. So I apologise again if there was I wasn't trying to interrupt. But you would agree with me that it's not preferable for the governments to try to stop the automatic stabilisers from functioning?
That's usually the advice of economists, yes, to allow the automatic stabilisers to function.
Yes. So you would agree that to the extent, should returning the budget to balance within the forward estimates be a goal of New South Wales economically?
Not necessarily. I mean, Mr. Walters is probably, as the chief economist, can provide you with the more economic answer on that. My focus as an economic policy advisor at the moment is returning the economy to growth and to a healthy economy. That's the focus that I have in the advice that I provide. Whether that means, so if we get the economy growing again, as I've already said, revenue will come back up. That may indeed bring us back to surplus or at least break even on forward estimates.
I mean, Mr. Mookie, that will clearly be a decision for policy of government. The government has been running a policy, as you're aware, of operating surpluses. And certainly from a rating agency perspective, regardless of where we land to your question, they will look for a pathway to improvement. So whilst AAA might be questioned, what they will fundamentally look for is what is the government's attitude and discipline around improving the operating position of government.
So Mr. Pratt, I just want to just concentrate. So you said a pathway to improvement rather than an emphasis on a surplus.
Well, I can't answer that for government, Mr. Secord. That is their decision. All I'm indicating is that a rating agency will look at the way the government is managing their operating statement. That will be a key factor for them.
Good. Mr. Walters, I think you were being given the opportunity to expand on Ms. Wilkie's advice too. That is, the question is to the economic imperative now, that is whether or not the budget should be set to return economic growth as fast as possible, or whether or not the budget should be set to return balance as fast as possible. Do you want to provide any views on that?
Sure, Mr. Mookie. So my economics perspective would be, as Ms. Wilkie said, you let the automatic stabilisers work. There's a role for government in supporting final demand growth in the economy when the private sector is suffering, which is the case right now. Whether government returns to surplus over time is a policy decision for them.
Thank you on that. Can I just, to close off this discussion, we were talking, Ms. Wilkie, you were making some references to various aspects of the revenue base, that is the New South Wales revenue base. You've mentioned your views as to the unpredictable nature of GST, payroll tax, stamp duty. Do you, I presume that given that we've suspended, well, in large part gambling in the state, you'd expect a downturn in gambling and racing taxes. I presume you think that fines revenue might well be stable, or otherwise. I'd like to hear your views on what you think that is. Can I also ask your views as to the impact on land tax and also on the sale of government goods and services, which is predominantly, according to the budget papers, transport revenues? Do you want to give us your views on those other sources of revenues? And incidentally, if we're doing it, let's cover some royalties too and dividends.
So on so gambling, yes, we definitely expect. So we're doing the economic forecasting round now. We have to do the economic forecasting round before we can do a full revenue forecasting round. So haven't started the revenue round yet because we haven't finished the economic round. But based on earlier works that we have done, yes, we expect gambling revenue to come down. We expect fines to probably come down a little bit. which is as much based on the fact that people aren't moving around as much, and so there aren't as many people getting fined. But also we would expect the forecasts we make always take into account what sort of proportion of hardship applications there might be, and where fees might be waived, fines might be waived, etc. People are in hardship, so we would expect even just if there were the same number of fines being given, that we wouldn't necessarily collect all of that revenue. In terms of
Land tax?
Land tax. I mean, it's smaller, so again, but because transactions are likely to be down, that's probably going to be down as well. But that's one of the ones that it's not one of our major revenue lines, so we haven't looked at it closely outside of the forecasting round we're about to do. And then for royalties, I mean, that's dependent on prices as well as volumes. So those have been holding up, but it's unclear. I mean, that's going to substantially depend on what happens in some of our purchasing motions and that sort of thing. So that one's usually fairly tricky to determine which way it's going to go. So that one we're still looking at, or going to have to look at quite closely. So sales of goods and services, public transport revenue is significantly down given the significantly reduced numbers of people on public transport. It's down 75%, so that revenue will also be significantly reduced. And dividends, I'm assuming will be
significantly down as well.
Down too.
Thank you. Earlier, Mr. Pratt, in response to an earlier question, you talked about recovery and response, and you mentioned the phrase team. So, what is the structure, or what is Treasury doing in the recovery response phase?
Well, the response phase was largely what we have put in place, and that's contained in this brochure, Mr. Secor, that you may have seen that we've put out. That is what I'd call respond in terms of the package releases that we've done over the past 6 or 7 weeks. In addition to that, I put the university piece that we talked about earlier in that respond phase as well. We're largely done, I would argue, at this point with that. Recovery goes to really the core of the questions you're both asking around what does that look like from a fiscal position, and then what are the drivers to help that recovery. And so therefore we've started work on looking at a number of opportunities to do that. Very early days yet on that, but recovery, getting our minds around what we need to do now to get the state back in a position more broadly that we've come from is a very important focus now. So, I quote an example of, a full review of looking at shovel-ready projects. How do we get those brought forward and start to invest in those areas to, again, stimulate economic activity and, of course, create jobs.
Okay. Now, earlier in response to another question, you talked about looking at bringing projects to market. What projects were you were looking at, accelerating or looking into new areas of projects to market? What were you referring to?
These are the shovel-ready projects that I'm talking about. Largely under 100 million, there will be a large number of projects that we could accelerate. I'm not talking major infrastructure, I'm talking smaller projects.
So you weren't... Sorry, I cut you off. Go ahead.
No, that's all right. No, so Ms. Boyd's questions, for example, on social housing, this is a very good time, for example, to do maintenance on social housing. It not only creates economic activity and jobs, but it's part of the government's policy to address that. So it's a document, if you like, in terms of alignment with government policy. So that's
Thank you, Mr. Pratt. I'm mindful that my colleague, Mr. Mookie, wants to ask a few more questions. What is happening with the scoping study involving the WestConnex privatization?
That scoping study is underway, and I'm anticipating we will get that back by the end of this year.
Okay, thank you. Secretary, can we turn to the question of Virgin Airlines? The Treasurer has made public that there is the New South Wales Government is participating in the voluntary administration process, in that it is determining whether it wishes to bid or have anything to do with it, really. We saw yesterday that Queensland flagged that they're prepared to either provide other financial incentives, guarantees, loans, or take a direct equity stake. I'm mindful of the fact that the bids in that are closing, I think, in an hour on that. Is it the case that New South Wales is prepared to adopt the same suite of measures Queensland has adopted? That is, financial incentives, guarantees, loans, or equity stakes?
Mr. Mookie, unfortunately, given the nature of the transaction we're talking about, I really can't comment on that. That is a matter for the Treasurer.
All right. Has New South Wales agreed to enter into any consortium with anyone? Are we joining a consortium?
Question, are you talking specifically Virgin?
Yeah.
Again, I can't comment on that.
Okay. The New South Wales Government has appointed Mr. Michael Carp-Harriet as being the person who is our lead here. He's, apart from, I think he's the current chair of the iCare board. How was he chosen? When was he chosen? Was it a competitive process, or what process did you use to choose him, and how is he being remunerated?
He is as you may well be aware, he's a very experienced investment banker. His career role was in investment banking, and therefore he is very experienced in these matters that we are talking about. So he brought a lot of skill and capability to this transaction, and to my knowledge, he is not being remunerated.
How was he selected?
There were various names, I believe, that the government looked at. I can't talk in detail to the selection process, but was
there a selection process?
The government certainly looked at options, Mr. Mookie, but I'm not a party to, I can't talk to that. But what I would say, his name had a lot of support from me, given his background.
Sure. And look, I'm not disputing by any measure the expertise that he brings, by any measure. I just want to know how exactly was he selected and who else was considered.
I can't say that, Mr. Mookie, I don't know.
But why not, Mr. Secretary? I mean, this is an appointment by Treasury. Was it an appointment directly made by the Treasurer, or was it made by you?
Well, it was made by the Treasurer, but with various input from, I would think, different people. I mean, this is a very significant transaction. It requires specific skills. He has those right skills, so he got my support for those reasons.
I don't dispute that. And again, this is not to question at all the expertise that Mr. Carp-Harriet brings. I mean, I remember he had a lot to do with the bid to buy Qantas by APA when he was at Macquarie Bank. Like, he knows the industry very well. What I want to understand is, did the Treasurer appoint him directly? Did he call him up? Like, is there a contract in place? What exactly have we got? What's the mechanism? How does this work? How long is the engagement for?
I'd have to take that on notice and come back to you, Mr. Book.
Mr. Walker, I'm sorry, your time has expired. We'll now move on to Ms. Boyd.
Thank you, Chair. I just wanted to understand a bit more about the shovel-ready projects that we're hearing about. And it was good to hear that that doesn't just include big, high-profile projects, but from what you were saying earlier, Mr. Secretary, it also includes maintenance of social housing stock, etc. Can I just get an understanding from you as to how much of the proposed investments in infrastructure and other projects to stimulate job growth are in the big shiny projects, and how much is in that more, I guess, lower profile, but really necessary improvements to infrastructure?
Yes, I might see if we can put some numbers on the below 100, but they are significant, below $100 million projects, to give you some numbers on that. I'll just see if we can track that down. But the total infrastructure project spend is $97 billion.
Mm-hmm.
That is all infrastructure. I guess a point to note related to my earlier comments, Ms. Boyd, is that is all physical infrastructure, be it transport or hospitals or schools. I would question from where I sit now whether in fact that's the right balance with digital, and whether the government should be thinking more broadly around more significant digital investment. But I wasn't referring to that specifically in the response to Mr. Secord. What I was referring to was under $100 million projects, and they are in the hundreds. We're just trying to get a number for you, but there are many of these projects spread right across government, and many of those, add to local employment. Many of those will be regional, and so that has a very positive spin-off as well, and potentially does help with youth unemployment, the issue you raised earlier. So let me just see if we've got those numbers.
Yeah, so I've got various different numbers here, Ms. Boyd. So some of the sorts of, so we were variously referring to these shovel-ready projects or screwdriver-ready projects, because they're not the big shiny ones. So they include things like $96 million was provided to with fencing and Crown lands. So coming out of bushfires, and lots of fences were destroyed. Significant for agricultural producers, obviously, to have fences repaired. So the government's put a significant investment into having fences repaired. Mr. Pratt's already mentioned maintenance for social housing. So there's been $47 million put into that as well. There's been other smaller scale capital works in the transport sort of space. So things like local road maintenance of roundabouts and curbs and pedestrian crossings and bike lanes and that sort of thing going in as well. We already mentioned social housing and Aboriginal housing maintenance as well. So there's $500 million in that space as well. And then various other capital projects in 500,000.
Sorry, 5 million.
Yeah, 5 million,
yeah.
Right. Various other projects capital projects in the health space, so regional hospitals projects and that sort of thing as well. So there's sort of stuff going on across a whole heap of clusters in that sort of screwdriver ready sort of space. Because we wanted to get the money out quickly, it's mostly focused on repairs and maintenance types of issues rather than new things.
So will those projects then require more public sector workers? Are they public sector jobs that will be created through that?
It's probably more local contractors and local builders, plumbers, local contractors and local people being hired rather than bringing people permanently onto the public service payroll.
Okay, understood. And is any of that funding going direct to councils for some of the projects that councils are needing funding for?
So yes, there are payments that are going direct to local councils.
For those projects?
No, not for those projects. There's a separate buckets of money that are going to the local government.
And not in the form of loans, but in actual?
There are loans as well as grants.
Right.
And the money is being used.
What percentage do you know is grants and which is loans?
That I would have to take on notice. It's not in front of me right at the moment, and that we'll need to sort of work through. With loans, usually what we do is say that there's a fund of money available, so we need to also have a look at how much is being taken up. Okay, thank you. Mr. Pratt, the digital shift concept and I guess, we have seen in the last few months incredible adjustment to
a different way of working and a different way of living. And as you say, the take up and the reliance on internet and different digital technologies has been massive. Some are speculating that some of those changes will stick, working from home, for instance. What other shifts have you seen in the economy, and how is it changing the approach of Treasury to basically, is there anything that you had in the works that you now think actually isn't such a good idea, but instead we should be focusing on something different?
It's a good question. Look, I'd say it's certainly still pretty early days in this regard, but Stephen Chief Economist, will probably have some data, no doubt, on this, but we are seeing a real shift already in a propensity to buy online. And so that will force changes in business models that we talked about earlier. I do think in government, if you look at that mix of physical and digital investment, we have a $97 billion, as I've mentioned, infrastructure program. We have a $100 million digital fund. Now, in a post-COVID world, I will be questioning whether that's the right mix or not. The government's got a big investment in physical infrastructure, and that needs to continue. So the question will be, do we put more into digital infrastructure or not? And I think the answer to that would probably be yes. I mean, what I'm seeing from the community more and more now is a real desire to deal with government online. Now, credit to the government, I think we've made a lot of strides forward in digital. The government, New South Wales, is generally recognised in this country as being a leader in digital, and in fact around the world, but there is still a lot more we can do. I also think, to your question, we will need to come to grips with the changing world of work. The more this continues, from the point of view of human behaviour, I suspect that more and more people will not want to come back to a pre-COVID way of working. Now, that might be some blended modal approach where maybe there's 2 days in the office, maybe there's a couple of days at home, maybe there's a day in some sort of hub that we set up in various parts of Sydney that people work together in. But Treasury is an example, Ms. Boyd. I'm doing regular surveys of Treasury staff. Some 80-odd% of people are responding, and this won't surprise you, but they don't miss the daily commute into Sydney. Now, for some of them, that's 3 hours a day. There is a productive 3 hours that maybe could be spent at different hours of the day, depending on their home working environment. Now, fortunately, we had done a lot of work in digital about working remotely before COVID. That has stood us up really well over this COVID period. In fact, much better than I anticipated. We've had very few technology issues. So I guess overall, to answer your question, I think there's going to be a shift. I think government has to address this in a serious way, both around work and around other issues for government, how it transacts with the community. But then I think more broadly, goes to your earlier point about business models. How do we support the business community through good policy and so on going forward? So I'm sorry, that's a long-winded answer, but I hope I've addressed the issues that
it's useful. And I think it's important that we reflect on the changes that have occurred. I guess also, what have you learnt about the vulnerabilities of the current way of doing things, I guess? So I'm thinking there particularly about revenue vulnerabilities and volatility during a situation like this. And what have we learnt, and what might we do differently in the future?
Okay.
I can take. I'm going to give Mike a chance.
Sorry, my voice is
rest his voice. So that's a really good question in terms of the vulnerabilities. I mean, obviously, as we're working from home, the public transport system has capacity is down 75%. So that's obviously a fall in revenues for us. So in one sense, that's a vulnerability. But if we we've seen through what's happened with that people have shifted. It's not just that we've seen 75% of people not travelling. 75% of people have stopped using the public transport system. Some of them are staying at home. Some of them have shifted to walking or to cycling, and some of them have shifted into driving their cars more. So obviously that last modal shift is not something that we want to lock in. We would love to lock in more walking and more cycling, and we would also like to lock in more working from home or a blended way of working so that we can try and cut off some of those transport peaks. So while that has revenue implications for us in the short term, it also has pretty significant implications for us in terms of where we should be investing in public transport into the future. So yes, there's vulnerabilities, but there are also opportunities that come with that. So with all of these sorts of patterns and trends that we're seeing, we are starting very much to try and dig into them further to understand what are the likely to be the enduring trends and what aren't, and then what are the implications of that for government service delivery, for revenue, for investment into the future. So another good one to look at is telehealth. The Commonwealth agreed to put telehealth onto the MBS. We've seen a shift into telehealth being used by GPs, other medical practitioners like speech pathologists, etc., etc. That's broken down barriers both from the medical practitioner's point of view in terms of using telehealth, but also from patients' point of view in terms of being willing to use telehealth as well. And in terms of being able to provide health services to vulnerable people, to remote communities, all of that sort of thing. This is something that we would absolutely like to see continue, somewhat dependent on the Commonwealth agreeing to make that addition of a Medicare number permanent, but Minister Hunt has made noises in that direction, so we're very happy about that. But also in the health space, in the first couple of weeks of April, we saw a 50% drop in presentations to the emergency department across New South Wales. Now that's probably because for a number of different reasons, people were scared to go into EDs. Now, if they have stopped going into EDs, they've still got a medical condition and they're not seeking medical help, that's going to have implications, costs to the system and costs to individuals in the future. If they went to a GP instead, that's a really positive change that we would want to try and embed. And also, the fall is also probably because less people moving around, people not playing weekend sport, so less accidents, injuries, people presenting for that reason. So that's probably likely to come up. But we need to dig into those sorts of trends that we're seeing, understand them, and then work out what we can embed going into the future that is advantageous for the state and for individuals, and work out how we can mitigate some of the harms. Like, if people are sick, we do want them seeking medical help. So that's as much about getting confidence that turning up to an ED department isn't going to expose you to COVID-19 as it is about anything else. So those are some of the sorts of issues that we're sort of looking at. And, the ED thing is just a small part of the broader health system, but if we can embed some of those changes and then work with the Commonwealth to get broader health system reform, that has enormous benefit, not just for the productivity of our health system, but also for the wellbeing of New South Wales citizens in terms of getting better health outcomes. So those are all of the sorts of things that we're looking at, whether it's across education, health, transport, planning, those sorts of things. There's just quite an astonishing array of things that this is showing up to us in terms of the way the economy works, that we can look at the changes.
Ms. Boyd, could I just add one other point to that, and that is by way of a practical example. Health is saying that social distancing will be with us for some time now, and I'm sure you're well aware of that. If we just returned everybody to work in CBD Sydney, we would have a massive problem on public transport with social distancing. And so we're working through what does that mean for the public sector, what does it mean for corporate Sydney? Because it's not just the public sector, it's clearly everyone else in CBD. So these are issues that we're going to need to work through over the next little while.
Just in the time I have left, a couple of random points. Sorry, I'm jumping around a little bit, but one of the sort of risk scenarios, I guess, if you look forward, is the situation where New South Wales continues to face strict restrictions, but the rest of the country doesn't. Has there been any thoughts around what happens when federal government support falls away, but if New South Wales is still being sort of stronger hit than the other states? Is that something that has been actively discussed at a state and national government level? If one state ends up being harder hit for longer than another, and we have border restrictions, etc.
Look, I'm sure that's a discussion point at National Cabinet. I'm clearly not a party to those discussions, but the PM, as you've seen, has laid out their 3-stage plan for recovery, but has really handed it to the premiers. And it's for the premiers now to work through, and I'm sure each premier is balancing up, the primary objective of health versus easing up economic upside. But as you're also well aware, we have states we are largely flattening the curve clearly across Australia, but we have states in different places, with some states with closed borders, for example. What does that mean going forward if that continues? Those issues are being debated at National Cabinet.
So that's across this bridge if we come to it, rather than actively being considered at this point?
It is moving so quickly. I mean, they are meeting weekly, sometimes twice weekly. So I expect this will continue to evolve. Yeah.
We talked before about investment in physical infrastructure, but obviously jobs are also created through an investment in social infrastructure. Are there plans around that at this stage in terms of boosting the numbers of workers in all sorts of mental health services, in domestic violence services, etc.?
You talk to
Yeah. So the support packages that we've already put out have provided some support in those areas as well. And again, I guess
as part of the recovery, though, as opposed to the response.
So this is one of the things. I mean, I use the example of the emergency departments and that sort of thing. I mean, we're also seeing changes in these sorts of service provision as well. And so some of the rapid analytical work that's going on across clusters at the moment is to try and understand some of those changes, and therefore what that means in terms of future service delivery, both in the immediate sort of over the next 6 to 12 months, as well as then what it means over the longer term after that. So,
but there's no bucket of money being, like we talked about the amount that we're going to spend on physical infrastructure. Is there an amount that we're going to spend on social infrastructure, acknowledging that that also creates jobs?
So the way we undertake the budget, the physical infrastructure number is one that we always calculate. We don't always calculate the social infrastructure bucket. But those issues, as we move through into the recovery and then the reform phases of the New South Wales Government response, those issues are part of those conversations. We don't have a specific number against it.
And is the intention to borrow for that physical infrastructure spend with record low interest rates? Australia is still relatively healthy and attractive for investors versus some other countries. Is the plan to borrow?
In the half-year budget update, we have got across the forwards borrowing negative net debt to 41 billion. Through this cycle now of post-COVID, we'll need to look at what that debt position revised looks like as a result of these packages. So there will be certainly more borrowing coming in on the back of this.
That should have been my question. Is there going to be more borrowing as opposed to are you going to borrow? But my time is up. Thank you very much. Interesting points.
Thanks, Ms. Boyd. Before Ms. Ward quite rightly calls me to order, I'm going to now invite the government if they wish to ask a round of questions at the end.
Heavens no.
All right.
I very much appreciate your invitation, Mr. Chair, and given it was so nicely done, I just wanted to thank the Treasury officials and for all their incredible work at this time, and know that the common enemy here is COVID, and that we're all working very hard, and we appreciate your hard work on all of this. That's all I wish to say. Thank you.
Thank you.
Thank you.
All right. On behalf of the committee, I'd like to express our gratitude to each of the 3 Treasury officials who have come today and answered the questions to the best of their capacity. We've appreciated the frank exchange. There are a number of questions that I think you took on notice, and the committee has resolved you have 21 days to provide answers to that. So at this point, to all 3 of you, thank you very much. Mr. Pratt, I know you've got to go and put a bid on for Virgin, so we won't want to delay you any longer. Again, thank you very much.
Queensland does. Do the complete opposite.
Yeah.
Thank you, Chair. Thank you very much.
All right, and I'd ask the committee members to stay on board after we end the webcast for a brief deliberative.
Thank you.
Thank you.
Thank you.
And